Good morning, everybody. Happy Tuesday. I hope you like this new format for my daily emails. I'll be alternating between videos and writing emails as well. So 187,180 people have recovered from COVID-19, according to the COVID Tracking Project. Pretty incredible, if you ask me. Yesterday, we did just under 232,000 tests in the United States with a positivity rate at about 9%. So this was the first time positivity rate fell to single digits in weeks. A sustained increase in testing, as well as consistent decreases in positivity rate, will serve as a clear indicator that the trend downwards is forming for the virus finally. Yesterday was a volatile day in the market, with the Dow being down at 300 plus points, but then ending the day slightly in the green. These types of volatile swings are going to continue for the foreseeable future, right? As uncertainty will remain for an extended period of time, and the markets do not like uncertainty. So with volatile swings like this, tends to come some sort of range-bound trading. And although we've seen the markets put in a floor on March 23rd of about 18,000 on the Dow Jones, we've seen that range on the Dow be trading between about 20,000 and 24,500. So that will continue going forward more than likely. Yesterday, though, investors were able to shrug off just growing tensions with China, and instead we focused on domestic business and the prospect of states opening up their economies, albeit slowly, but some activity is viewed as better than no activity at this point. We also got word yesterday that pharmaceutical company Pfizer, in conjunction with NYU and the University of Maryland, began human trials on the first of 4 vaccine candidates that they have for coronavirus. So this marks the most recent experiment in a search for a vaccine for COVID-19. Today, we're going to get earnings from a major player in Disney. We're going to get earnings from video game makers Electronic Arts and Activision. And finally, we're going to get earnings from alternative meat company Beyond Meat. And this will be significant as prices for meat continue to climb amidst this growing concern of a beef and pork shortage. Keep in mind, the media is talking about a beef and pork shortage, which makes us believe that somehow cattle are dying or they're unable to be produced. This is not the case. Really, the issue in the supply chain is coming from labor-intensive jobs. Processing and packaging of the meats for distribution is really what's causing the disruption. Oil today is now up for the 4th day in a row. It's doubled in just about a week. And, thanks to America's push over the past decade or so to gain oil independence, this is great news for U.S. producers and refiners, as they do need higher oil prices to sustain. Today is going to prove another volatile day, and as each passing day will bring its own set of surprise news, sometimes good, sometimes bad, uncertainty is going to lead to volatility, but don't let that uncertainty cause an emotional response. So Warren Buffett has said it from the very beginning, but he reiterated it this weekend during the Berkshire Hathaway shareholder meeting. If you own stocks, plan on owning them for an extended period of time. Make sure you can financially and emotionally stand the holding period. And if you do decide to continue owning stocks, you need to look at those stocks, those companies, as if they were farms that you owned. The spot price of the farm or the stock on a day-to-day basis doesn't really matter. What matters is, what does your farm produce? What does that company produce, or what service does it provide? And can it provide that service or good going forward? And given the environment, does it have some sort of a competitive advantage? So have a wonderful Tuesday, everybody. And please let me know if you like this video format or if you would prefer a traditional email format, as I'll be trying to incorporate both going forward. Have a great Tuesday, and I'll see you all tomorrow.